Okay, good afternoon. Thank you for joining with us this afternoon on this urgent or this unexpected webinar. I have Maria Lenrelli here who will be presenting this webinar today. Just before we get started, just want to make sure that everyone can hear me. Can you show me your hands? Oh, well, click on your show of hands if you can hear me. Good, thanks, Tracy. Yes, so I think we all can hear. Oh, good. So if I will be answering questions during the sessions. Maria will be talking through with you. If you've got questions, just don't forget to don't hesitate to send it through. We will go through it. If I can answer it, I will answer it during the sessions. But if not, Maria will come back at the end of the sessions, and we'll go through the questions as we when we finish each sections. So over to you, Maria.
Okay, thanks, Tiana. Welcome everyone this afternoon to the JobKeeper payment. It's been an interesting couple of weeks, I think, everywhere for everything. You know, we've had legislation that was rushed through Parliament in, 3-4 weeks compared to 3-4 years, and things like that. And it's
just hold on, Maria. Do you want to click share presenter? Just hold on. So you can share because no one can see the screen at the moment. Just hold on.
I was wondering about
just hold on.
that. Okay.
Thanks, Peter.
Screen.
Okay, done. You can see your slides.
So can everybody see my screen now? Terrific. I won't go through who I am. I think some people know me, and at the moment we've only got an hour, so we'll do the important stuff. So, we've had legislation that has rushed through, and it is constantly changing. I'm attending so many things and reading so much, and what was true last week changes this week. And Treasury and the ATO are constantly making changes in response to lobbying by associations and software companies and things like that. So while this presentation is true and correct as at today, tomorrow that might change. So please review all of the information as we go along. So I'm going to start off with the types of government assistance that there is available, because there's some confusion about what's available, and is it 1, is it 2, is it 3? So the first one is the federal government cash boost stimulus. The second one is the federal government JobKeeper. And the third one is the state government small business grants. Now, I'm not going to talk about the small business grants at all. I'm going to briefly touch on the cash boost stimulus, more just to give you an overview so you understand what the difference is. And then mostly we're going to concentrate on JobKeeper. But the small business grants are in each state, so you'll need to refer to each state government. But generally, if you've had a 75% downturn, like New South Wales had in the bushfires, you can apply for a $10,000 grant to help you with overhead type expenses. So I'll move through to the cash boost stimulus first. So basically every eligible business and not-for-profit will receive $20,000 to $100,000 is the maximum. So $20,000 is the minimum, $100,000 is the maximum. And what that is designed for is to boost cash into the business as early as possible to help them. Most of them, ATO originally announced that they would be releasing the money on the 28th of April, which is today. Most of mine that I had lodged early, some of them have already got the money last week. So the main difference between the cash boost is it's going to be delivered as credits on your BAS activity system, so your integrated client account. And it's generally going to be equal to the amount you withheld from wages to pay the employees for each month or each period from March to June 2020. So Oh, that's just a screenshot of the same thing. So the key points is you don't need to apply for it. The government automatically will do that for you. It's not means tested. You don't have to prove a decline in income. There is nothing to do. It is based on your W2 figure and W1 figure when you lodge your BAS. It's not income to the business. It will be non-assessable income. You won't pay income tax on it generally. In the case of trusts, there might be some slight variations, but we'll leave that up to the tax agents. And it won't need to be repaid, as in the business won't need to be repaying it. But let's face it, the government is handing out this money because the economy needs it now. It will eventually have to be repaid, and the only way it'll be repaid is taxes. But that's way down the future. They are putting the money in where it's needed now to help businesses survive. So ATO will calculate it automatically. There is a great little website that you can actually go to, which is Digit Business. And what they have done is there is a calculator on the website. So if you're quarterly, so this example is a quarterly person, you put in what your quarterly amount is and hit the calculate button. And it will then tell you when you get the money and how much it's going to be. So for example, if your PAYG was 12,000 and in both quarters, then you will get a total of 48,000 up to the maximum of 100,000. If your wages tax was only $1,000, you would get $10,000 with this June one coming through now. So that's if you're quarterly. If you're monthly, it does exactly the same thing, and it's paid into your account as you go along. So that's stimulus number one. That's called the cash flow boost. You don't have to do anything except for lodge your BAS or IAS, and the government will automatically apply it to your GST account. If it is more than what your BAS is, they will refund you the money into your nominated bank account. So it's a good idea to double check the bank accounts that the ATO have for you. For example, I went to check one this morning. It had no details at all what her bank account was. So we quickly put that information in there. So the next one is the JobKeeper, which is the main one we're going to be talking about today. So JobKeeper is designed to help the businesses affected by the coronavirus to cover the cost of their employees' wages so that more employees can retain their job and continue to earn an income. So for employee, this means that they can keep their job even if they are forced not to work. So for example, things like gyms and nail salons and things like that, the government directive is that they have to be shut, so the employee has to stay at home, and therefore if the employer is eligible, they've had the 30% downturn or more, in some cases it's 100% downturn, we will give you the money to help you still cover the minimum wage. So this isn't to be confused with job seeker. So JobKeeper is for the business, and the business applies for it and then pays the employee. Employees, if they're not eligible for JobKeeper, can go to Centrelink and register for Job Seeker, which is a similar amount but a different process and done through Centrelink itself. So the key points. You do need to apply for it by the 30th of April to receive the first payment in May to cover the wages. However, yesterday, the tax office has now extended the initial registration date to the 31st of May 2020, and it will be allowed to be backdated to when they originally introduced it, which is the 30th of March 2020. You can't enrol an employee unless they have accepted that they will do JobKeeper through your organisation. So you might have an employee that is on Centrelink benefits. They're earning $200 a week from you. They're happy with that $200 a week. If they get JobKeeper, it might affect Centrelink benefits. So they choose not to register through you. Or in this day and age, we've got lots of people that have 2 or 3 jobs. They can only accept it through one employer. So they have to nominate which employer they want to accept it through. So it is means tested. Your business must have a 30% decline in turnover, 30% or more. And I'll talk about the decline in a little bit more detail when we're talking about the registration. And JobKeeper will run from 30th of the 3rd, 2020 to the 27th of the 9th, 2020. Now, the government has got a get out clause, which we don't think is going to be implemented. So at this stage, it runs for 6 months. But if the economy is absolutely booming and nobody needs the money, they reserve the right to cancel the scheme. I don't think that's going to happen. Most people don't think it's going to happen, but you need to be aware of it, that it could be withdrawn. But you would have noticed that it's going to be withdrawn, so you don't pay the top up to the employee. So it's not income to the business, as the wages you pay should be more than or equal the amount of JobKeeper. So if you pay the employee $2,000, they are still working, $2,000 a fortnight, they are still working, the government will subsidise you up to $1,500, well, $1,500 to cover part of that employee's wage. If the employee, however, earns $1,000 a fortnight by their normal working, then you need to top it up by the $500 so that the minimum that the employee gets is $1,500, which is what you have received. Now, this money is in arrears. You have to have paid it out in April, and they've just extended it again yesterday to the 8th of May, that for the month of April, you don't have to have paid it on the fortnight or for that fortnight. You've got a couple of weeks to do the catch-up payment, but then every other fortnight needs to be paid to the employee as you go along. Now, that is up to the business to be able to fund that. Now, the government has announced that they're working with the banks, and there are several banks that will be providing some sort of financing and things like that, and it will be guaranteed by the government for 50% of whatever the loan is for 3 years, and there's a holiday on repayments. So the idea is you must pay it to the employee in the month of April or beforehand, and then you will be reimbursed in the following month. So April will be reimbursed in May. May wages that you pay will be reimbursed in June. June wages that you pay will be reimbursed in July. So will not need to be repaid because you've already spent it to the government. Now, the ATO is aware that there are businesses that are going to try and take advantage of this, and if you then didn't suffer the decline that you said that you did, they may ask you to come back and repay that money. So all of the initial registration is self-assessment. They will be doing some checking. We don't know when, but they're going to be doing some checking. So you need to be absolutely certain that if the tax office comes calling, you have all your T's crossed and all your I's dotted to make sure that you really were eligible for the money. And you might not be eligible in April, you might not be eligible in May, but you suddenly have a decline in June. You can register in June. It just means you get 4 months of it. So it's not an all or nothing. I have to rush now. If you're okay now and haven't had the 30% decline, you've only had a 15% decline, then you don't have to register. But part of it is also a projection. There are some industries that you can tell now that it isn't going to be okay in June. And I'll give you a couple of examples because these are real life examples from my clients. The client I was at this morning is a conveyancer. March was pretty good. April was down, but only by about 8%. because all the properties were exchanged back in March or prior and are settling now. So it has kept on going. But May, she now only has about 8 settlements, whereas before she'd have about 15. June, she's so far got 3. The real estate industry has indicated that a lot of properties aren't selling. So that's had that knock-on effect. And a lot of people might not originally be affected by the forced government closures, but the ripple effect has carried on. Another client of mine is in the carpet industry. He's a carpet layer. Again, March was pretty good. He was actually growing. And then I said, but what about forward orders? He said, oh, yeah, we haven't been doing much quotes. So in his case, his downturn won't happen until May or June. And I'll talk a little bit more that when we talk about the turnover. So for the first 2 fortnights, as I said, which is 30th of March to 12th of April and 13th of April to the 26th of April, ATO will accept that the minimum payment, $1,500 per fortnight per employee, has been paid even if it's paid late, provided it's paid by, the original date was the 30th, which is day after tomorrow. Yesterday, they extended it to the 8th of May. So if you had been paying people, but not the full amount of the $1,500, you've got time to pay it to the employee by the 8th of May. So if you don't pay your staff by this date, you'll not be able to claim the JobKeeper for the first 2 fortnights. So May onwards needs to be paid on time based on the ATO fortnights. So step 1 is determining your decline, and it has to be 30% or more, and from which month. You then need to determine which employers are eligible based on the ATO requirements. So full-time, part-time employees were employed by you as at the 1st of March 2020. So if you hired someone on the 5th of March, they are not eligible to do JobKeeper through you. Casuals needed to be employed for a year, and it had to be regular and systematic from 1st of March 2019. So if you had a casual that started July last year, they're not eligible to get JobKeeper from your business. So you need to determine, I've got 20 staff, who is eligible to start off with. They're the ones I'm going to give the form to, but then based on their personal circumstances, they may elect or not elect to get the JobKeeper from you. So the second step is then, third step is to give the nomination form. Then you need to determine if you've paid the required minimum amount from 30th of the 3rd, because the nomination form only got created a week ago, which was in April. So we need to go back and look at, well, did we pay them anything? Did we not pay them anything at all and have to give them the top up, or they were still working and earned more than that? You then need to register with the ATO for JobKeeper, and that can be done via your tax agent, your BAS agent, or through your own business, MyGov ID or MyGov account, because some businesses have MyGov attached to their business. So it doesn't matter who registers as long as someone registers. So if you don't have the facilities to do it, talk to your tax agent. If you have a BAS agent that helps you lodge your BAS each month or quarter, do that through them. Notify the ATO via STP, i.e. the Ims software or GovReports if it's done through your tax or BAS agent, which employees are participating and which fortnight, because fortnight 1 is 30th of March to the 12th of April, but you might not have the employee starting. If you didn't get the forms back from them, they might not be starting, that you don't have to pay them until fortnight 3, which is the 27th of April and the next fortnight there. Then you will have to do a monthly reporting of eligible employees the actual turnover for the previous month and the estimated turnover for the next month. You will not get your payment until the ATO has had its notification. Now, the ATO have advised that it doesn't matter if your turnover goes up. Once you are in, the employer is in. But we want this information for statistical purposes to gauge how the economy is doing. So, you know, they've got the carrot and the stick. The carrot is we'll give you $1,500. The stick is you need to tell us every month how your business is going. We're not going to wait until you lodge your BAS itself. So, turnover. This is an example of what I have been doing with my clients. I've got my entity name, the day I did it, and when I'm looking at it for. So when I looked at it for this particular client, their turnover for the March quarter was 180,000, compared to the same period last year was 106,000. So they've had a less turnover, decline in turnover of 73,500 or 69%. Because they already met the minimum of 30% decline, they were eligible here automatically. If they hadn't, then I could go and look at the other months. So if you're on a cash basis for GST, you look at cash for the March month or quarter and cash for the March last year month or quarter. If you pass the first time, no need to go any further, you're automatically in. If you're not, then you would look at the month of April on its own. And you can then look at either cash or accrual. Because if you're accrual, you might be issuing invoices, but the cash isn't coming in. Or the cash is coming in the March quarter or the April quarter because of the invoicing you did in February and so forth. So you would then need to look at other circumstances where you might be eligible. What would a reasonable person? The tax office, if they believe that you've applied and you shouldn't have, they will come back and ask, okay, what was your projection? You based it on that you would, give me the backup to support you. So for me, I'm doing this spreadsheet. I'm printing out reports out of my accounting software. I'm looking at the other information. Real estate is down, it's going to have a knock-on effect. Nobody's wanting carpet laid, so that's going to have a knock-on effect. And you would need to keep this documentation there to prove if at a later time required. Now, step 4 is to determine if the minimum has been paid. Now, the tax office has done it by quarters. However, if you currently pay weekly, you would continue to pay weekly. If you pay fortnightly, you continue to pay fortnightly. If you pay monthly, you would continue to do it monthly. The $750 is gross. Tax needs to be taken out at the employee's appropriate scale. So if they're on a tax-free threshold, weekly it's $96, they need to be paid a minimum of $654 per week. If they're paid fortnightly, they need to be paid a minimum of $1,308. If they're paid monthly, they need to be paid a minimum of $2,834 net after tax. So you'll need to go and determine what's happened. Now, this is a spreadsheet I've created. It just made it easier so I can see which fortnight falls into what week, so that if I've got clients I need to register on different dates and times, I can easily do that. But it also it's determining how many fortnights there is in a month, because in some cases, in the majority of cases, there's 2 fortnights in a month. However, in the month of August, there's 3 fortnights. So you will need to have made sure that you have paid the minimum for the fortnights. Still continue to do it in your normal sequence, but you just need to make sure that you have done the minimum. Now, one thing you need to do is, because a lot of people have already paid their employees from the 30th of March or not paid them at all if they were stood down, you need to go through and have a look at what you've paid them. So this is an example of a spreadsheet that I am doing for my clients to work out if we need to do a top-up payment. So, for example, we've got Fred Nurk, fortnight 1, John Smith, fortnight 1, John Jones, fortnight 1, Mary Nurk, fortnight 1, and then we've got fortnight 2 for each of them. I just put in the fortnight ending date, so it makes it easier. We can see Fred Nurk, he got paid $3,846.37 in that fortnight. He doesn't need a top-up. However, John Smith only earned $355.28. So we need to do a top-up of gross $1,144.72. The tax on the top-up is $192. So you would have to determine, had the $355.28 had any tax out of it? Yes, it did deduct it from the full amount for the fortnight. If not, you need to deduct the full amount. So he needs to be paid $952.72 for fortnight 1. Now, again, the other employees were okay for fortnight 1. If we then look at fortnight 2, poor John Smith got $1332.53. So we need a top up for him of $167.47. The tax on the top up, because he previously had some tax, the difference is $45. So his net pay is $122.47. And then record when you've paid it. Best practice, don't pay it in your normal cycle. For example, if you pay on a Monday for the previous fortnight, pay it on the Tuesday, as long as it's paid by the tax office specified date, which is now the 8th of May. So you need to work out if a top-up needs to be done. So next thing you need to do is register. And this is an example of my tax agent portal. So I've gone into my client, and there is a COVID-19 assessment and a view button. So when I click on the view button, it gives me the option to enrol. Step 1 is enrol the business for the JobKeeper subsidy. Step 2 is identify and maintain, so make the payment, the top-up payment, and notify via STP which employees and which fortnight. So remember those fortnight dates, because most people will probably be starting at fortnight 1. You need to do that top-up payment. But if that didn't happen, they might start at fortnight 3. So you would then notify that it's fortnight 3. Then step 3 is you will need to come in here every month and do your business monthly declaration. Now, we haven't heard from the ATO exactly what needs to be done. We believe it is going to be your monthly actual from what we've heard, monthly actual for the previous month, your estimated turnover for the next month, and confirm how many employees will be in the month that's there. So when you click on the enroll button, you get this screen. And my screen has actually gone out of order, because the first one question, I'll just go forward a bit. No, I've skipped a screen. Sorry about that. I'll just go back. So the first screen actually asks you to confirm that you have had a downturn. It asks you if you're a charity, because a charity only has to prove a 15% downturn, not a 30% downturn. And if you're over $1 million, and I wish for me and for my clients that I had $1 million turnover, they have to have a 50% downturn before they are eligible. So for the most people, it's 30%. It then asks you to confirm that you have in fact had a 30% downturn, and you'll see there the tax office has got their disclaimer in that penalties apply for false or misleading statements. So you need to specify how many employees are going to be in each of the quarters. Now, at this stage, when you're just enrolling, it is just an estimate. You might end up having and this is what happened with me, we've registered that were 9 employees because we didn't get 2 other employees that had given in their forms, which they then handed in. So we now have to go and do a review those 2. So originally we registered for 8 or 9 or 10, but the reality is once you've done the final thing, you might have 10 or 11 or 12. You can also, if you are an eligible business participant, and that's usually for sole traders, partnerships, or business owners, directors that don't get paid through payroll. So you can then specify whether you have an eligible business participant. You then need to specify your bank account. So in this case, because it's mine, it's asking me to specify it's not a trust account, so it's not coming into me. It is going directly into the client's account, and I need to confirm their account name, BSB, and account number. We have been told that we will probably need to reconfirm that every month when we do our reporting, but we don't know yet. And then who the contact details are for this particular entity. So I've just brought up this screen again because those fortnights are very important to notify through the STP. Either, it doesn't matter which of the GovReports programs they are, any other accounting program, it doesn't matter. This information is set by the ATO, so they know exactly when the employee started and how many payments they need to make to you. So if you might have had 3 employees that started on week 1, but the 4th employee didn't start till week 2, they've got to give you 3 times 1,500 times 2 and 1 times 1,500. So it determines how they make the payment to you. So let's look at individually the software. And as I said, make sure you keep coming back to the information. GovReports is updating their blogs and support notes and things like that constantly because the tax office is changing the way they want the information reported. So the software company, GovReports, needs to make changes as well. So this is based on what it currently is now. Now I'm going to look at both of GovReports solutions. The first one is the Ims Tp Reporting, which is for the business owner, where you might be doing it manually or need to report the payroll and you're using the Ims software. You might be using MYOB or QuickBooks or Reckon or doesn't matter what it is, and you don't want to upgrade that software, and this gave you the option to do your STP and still be compliant, but without the additional cost. So the normal process is to create the pay slip. So go to Payroll, Pay Events and Pay Run, create a new pay run and then enter in the employee's name, frequency, start date, end date, payment date, and the employment payment types associated with the tax and the super. Just incidentally with the super, it's the employer's choice in some cases what happens with the super. If the employee earns $2,000 because they've been working, then there is super on the entire $2,000. However, if it is just a top up, they earned $400 and it was topped up by $350, the employer can choose to pay the super, the entire 9.5% on the $750, or only the $400 is classed as ordinary time earnings. So you might have a discrepancy between what the super is. It may not be on the full amount. Of course, tax office isn't going to say you can't do better. So you can choose to still pay it on the full amount of the $750. So with the additional JobKeeper payments, the principle is to notify the ATO of which employees to be selected and paid by the employer and receive JobKeeper benefits. And If it ended prior to the 27th of September, notify them when the employee finished. So the JobKeeper payment is treated as an allowance, and the principle is to notify the ATO which employees are selected and eligible, and then use the appropriate JobKeeper start date. Now, the tax office has been very specific that it needs to be JobKeeper-start-FN, and then 01 for the first fortnight, 02 for the second fortnight, 03, so they know exactly when it started. So in the case of the GovReports software, they've now inbuilt that in, so you don't actually have to create any of the codes, but if you had to, you would have had to make it absolutely specifically what the ATO said. So you've got JobKeeper Start, and you only use that at the beginning when you are notifying the ATO that they've started. Now, obviously, by the time we get to week 2, you are going to have a year-to-date amount. So it'll still have information in there, but week 2, you then use JobKeeper Top-Up, and it will have the year-to-date information carrying through as well. So that's if there is the top-up, if it's less than the 1,500. If they're more than 1,500, you don't use top-up, and you just put it in under their normal gross. So when the employee is no longer eligible, you need to notify the ATO using JobKeeper-Finish-FN and the fortnight number that matches the last fortnight you were paying the employee. So the tax office will then know that employee ended at fortnight 9. We only have to give them the JobKeeper up to the fortnight 9. They won't get it for fortnight 10 onwards. So if you've already lodged this STP for the 30th of the 3rd, you may need to do a full replacement lodgement to go back and edit the information that was there. So these are the fortnights that I was talking about. So you can see fortnight number 4 is 11th of the 5th, 2020 to the 24th of the 5th, 2020. So we use JobKeeper Start FN04. So you need to determine that based on the week you are going to start paying them, which fortnight they start from. So you then go into My Lodgements and then the history on the side menu, and open up the STP lodgement receipt for the starting period of the 30th of March. And then when you select the More button, you'll see that there is a full file replacement there. That means it will go back and edit the information so you can notify the ATO from that fortnight that your employees were eligible for the JobKeeper from fortnight number 1. So when you do that, the previously lodged STP report will now be reversed, and it'll go back on the saved STP report as a draft. So when it's there, you then need to go to Payroll, Payroll Events and Pay Runs. And the pay runs for all the start for the period starting 30th of March now have a lodgement status as published. So if, for example, we're going to go into David's payslip, we need to click on Open and then Edit and confirm to make any changes. So David earned more than the JobKeeper payment limit. So you'll only need to add JobKeeper start date, which will have a 0 figure. So what I mean by that is, he might have earned $2,000. We don't need to do a top up, but we just need to notify the ATO that he's going to be starting at fortnight number 1. So we would put JobKeeper Start FN01 with a 0 figure in there in the allowance section and save it. And that is what notifies the ATO through your STP that David is eligible for JobKeeper starting from the 30th of March, and he will get 2 fortnights or $3,000 paid to the employer to make sure that covers his wage or covers the top up to him. So we'll see there ordinary earnings, fixed amount $2,000, under allowances, JobKeeper start fortnight 1 and 0. So next for John, you go back to the payment run and open John's payslip and click Edit to confirm to make the changes. So John, we then have to do the same for John. So for the allowances, you need to add the JobKeeper start and a top up, because in his case, he earned less than the $750 per week for the JobKeeper payment. So a JobKeeper top up of $450 needs to go in for that week. So in this example, we've got his $300 that's gone in under wages and salaries. We then have allowance JobKeeper start fortnight 1 with nothing in it. That is just telling the ATO when John's JobKeeper started from. We then had the JobKeeper top up for him at $450. So we're then $300 in wages, $450 in the top up, a total of $750 for him. So you then need to save John's pay and move on to Jane. So Jane, with her, we've got, there was no payments made to Jane during the lockdown period. So what we need to do is create a new pay slip for Jane for the same period and payment date and enter wages as 0 because she didn't work, so it's not ordinary wages. We've just got to show the full amount. So we would have ordinary time earnings as 0, JobKeeper start fortnight 1, 0, and JobKeeper top up the $750. So the total combined, nothing in wages, total was top up $750 paid to Jane before the ATO date. So the pay run for the 30th of March is now ready to submit to the ATO, and as it was already published from the previous lodgement, you need to go to My Lodgement, Save Reports, open the STP report for the same period, click on Edit, and then you need to go to the More and refresh. So it will now update the information that you've just changed. So you need to review that everything's all okay on there. Happy with all of that, and we can go next. And then it gives you the confirmation and review. And then we need to look at the declaration. We're happy with that and lodge it again. So similarly, the new payslip created for Jane with JobKeeper allowance must be lodged. So you then go through pay run, tick the payslip, and then prepare the STP. So review the information and then click on the lodge button. So as John and Jane have a top-up amount in the allowance section, each subsequent pay run and STP lodgement to the ATO, you'll need to add the JobKeeper top-up and the amount in the allowance section of the payslip to be lodged. So that's the IM software for the business owners use that creates the payslips and so forth. Now we're going to look at the GovReports lodgement platform. So this is used by BAS and tax agents like me to lodge our BASs and STP reporting for our clients. So we go to the normal process of forms, STP, payroll, and there's our different options, and we need to go to the STP payroll events. So once we're in the payroll events, in the reporting info, we enter in the pay period from and to date and the date paid, the total gross payment and total PAG for the pay period for all of the employees. And then we go in the employees section to add the particular employee. So with our employee, now, if it's a new employee, if you've been using it before, you'd know that you have to enter in all the details to start off with. When you're doing subsequent ones, you can just roll it over. That way you don't have to keep retyping the information. So in this case, we've got all of David's details in there, the period that it covers, his usual information. So again, just to recap, we need to confirm which fortnight they start at, fortnight 1, fortnight 2, fortnight 3. Once only at the start of JobKeeper. The top up is the subsequent payments, and it will have year-to-date information. And if they finish you will need to enter in the finish date. And as per the IM software, you'll need to do a replacement file for the lodgement. So again, this is the fortnightly. Some people have twice monthly, but this is showing you the wages. So it would be through the normal process for file replacement, as we said. So to do that, we go to the particular lodgement, go up to the actions and pick the full file replacement. So that's pretty much just a recap of what we were talking about, the fortnight start date, the top up, and if there was a finish. So we've got our example here is 2 staff, John's working 10 hours per week and Jane's 5 hours per week with 1 working director, David. David pays himself $2,000 per fortnight. John gets paid each week $300 and working throughout the lockdown period. Jane normally gets $1,550, but wasn't working when the lockdown commenced. So David's made the payment and lodged the STP for the business to date, and now we need to do the full file replacement. So my lodgement history, pick the period starting on the 30th of March, and then go to more and the full file replacement. So STP payroll event will come up with the details that you had previously put in. So you will need to edit the information for each of the employees. So we click on the button against David, for example, and go to the actions button against David and go to edit. It's got all of his employee details. We need to amend the gross payments and the tax for whatever that was. In his case, we then need to go to allowances and we need to just notify the JobKeeper start date because he's already earned more than the $1,500. So we add the JobKeeper start for fortnight 1 and it'll have 0 in there. And then we need to go to edit and confirm the changes, so save the changes. We then need to do that for the next person, which is John. So we go to actions, edit. His ordinary pay stays the same. However, with him, we need to notify the start date, period 1, and then the top-up amount of $450 under the JobKeeper top-up. So we've then got the declaration and lodge for him. So the JobKeeper entries for the previously lodged reports can be added via the full file replacement. But with Jane, because she was not paid during the lockdown period, we need to create a new pay run and STP report for Jane for the same period and payment date. So you go to Forms, STP Payroll Events, it opens up, put in the reporting information, as you would normally do. The date, the period it covers, the total gross and the total PAYG. We then need to specify in her case, because she wasn't paid at all, the entire amount was a top-up. So we notify starting fortnight number 1 and top-up of $750. And then you would save that information and then go to the declaration and lodge it. So with John and Jane, because they have the top-up amount in the allowance section, each subsequent pay run and STP lodgement to the ATO, you'll need to add the JobKeeper top-up amount in the allowance section for the pay slip to be lodged. Okay, that completes what I had. There was a lot of information in there. You know, I know with me, I've been learning about this since the 30th of March, and it is overwhelming. So if you're feeling overwhelmed, it's normal. Just go back to all the support notes. Go back to GovReports and talk to someone. They'll be able to help you through. The information is there to help you get it right. So I haven't been keeping an eye on any of the questions, so I'll have a look at any of the questions that are there.
There are quite a few questions, so I thought, you know, it's quite relevant questions, good questions. So I thought we go
Great.
through it together.
Yep.
The one question's from Mohan Naraj. New business acquired and started paying wages from August 2019. Activity statement lodged up to March 2020. Cash boost is not appearing as yet. Will they get it?
They will, but the problem was the date in the original submission, well, I believe so, because they've lodged PAYG. It's not means tested. It didn't matter when the employer started the business. It is based on W1, W2. So it could be one of the ones that fell through the cracks, so just contact the ATO. It's not means tested. There was no start date. There was nothing to do with that with the cash boost. Okay, next question.
Next question is from Peter. Since we will be reporting monthly turnover, will the client still receive the JobKeeper payments if their turnover returns within the 6 months?
The ATO have indicated, if you actually have a look on their guides, once you are in, you are in. Even if your turnover goes up, they will not be stopping it. The only time they will stop the payment is if when you estimated it, you hadn't had a 30% downturn. So the monthly reporting is just for the ATO. They've indicated to the associations and the accounting bodies that it's just there for them to have a finger on the pulse of how businesses are doing. You know, if your previous turnover was 40,000 and it's 20,000 in April, then it goes to 25. They can see that the measures have been working and the economy is moving. But they have indicated it is just information. It won't be that they will stop your payments if your turnover goes up. Okay, next question.
Next questions from Peter. Again, the employee needs to be paid $1,500 per fortnight in gross wages or net. Is that tax? There is a tax table, say there is 194, and I believe that was 192 from your table, Maria, and total PAYG withholding.
Yep, it's 1,500 gross. When I've looked at everything, it's been 192. So use whatever it is in your system of how you're using it. Personally, I go to paycalculator.com.au. I like that because you can actually put in a weekly or fortnightly amount. And when I did it, it came up with 192, which basically is the same as what the tax office said. Okay, next question.
Next question's from Gay. I believe the salary sacrifice super is able to form part of the gross of 1,500 per fortnight. Is that your understanding?
It is my understanding, and provided the salary sacrifice was already in place prior to the 30th of March, it just keeps on going. So their normal gross is $3,000 for the month. They've chosen to sacrifice it, so it forms part of their taxable income is reduced, but it's still, this is based on the gross. It's similar to when we report for child support payments and things like that. You can have the deduction, no questions, it reduces your tax, but we will take it into account when we're assessing other eligibility and so forth.
Okay. The next question is from Mohan Raj, and I'm not too sure you can assist these questions, Maria, but we'll just try. Can an ACNC registered not-for-profit organization apply for JobKeeper wage subsidy? 99% of their income is from the state government for their services. My understanding is that, Mohan's understanding is that the state government income can be excluded for the 30% reduction in turnover.
If it's input taxed, then you don't include it in your assessable turnover. So the charities have a different threshold. For charities that are registered on ACNC, it's only a 15% downturn, not a 30% downturn. So when you're looking at it, when you're looking at your income, you specifically exclude what's called input tax sales. So if it meets the criteria that their normal income is has gone down by the 15% in the case of the charity, then you're in. You go ahead.
Okay. The next questions for Mohan again is the March 2020 BAS was launched 2 weeks ago, and the cash boost is not appearing as a credit in the ICA. Is that a concern?
It's not a concern. It's been on all of the pages and bulletin boards. It was only ever going to start on the 28th of April, which is today. The tax office system started rolling out early, but they haven't caught up with everybody else. Basically, they said if you report it on the prior to the 28th, it'll be applied on the 28th. If you lodge your BAS on the 29th, it can take 2 weeks to appear. But in some cases, people are saying that I lodged it today and it automatically appeared. So I'd still wait another week or two, and then if it hasn't appeared, then contact the ATO. At the end of the day, what they are going to be doing is if your BAS is $7,000, they will then just refund the $3,000. The BAS isn't actually due to the ATO until the 25th of May, because we get an extension if you're a BAS agent, or I think it's about the 14th of May. I think that's why they put the 14th of May as their date. So I wouldn't be concerned just yet, but keep an eye on it and then give them a call.
Okay. Questions from Helen. I have a client who does weekly pay on Thursday and pay on the 30th of April is the first week of fortnight 3. Does this pay need to be dated 1st of May to fall into the May payroll to prove to ATO? And then Helen confirms that they want to get JobKeeper start from fortnight 1. From
May 1. So
fortnight
no,
1.
Because fortnight 1, you need to go back and review what you've already paid and provided. So that's where a lot of people are getting hung up on. The tax office couldn't cater to every different scenario. Some people pay on a Monday up until the Friday. Some people pay on a Thursday that goes Monday to Friday. So as long as you have had 2 payments that equal the amount of $3,000 in that fortnight or in that month, then that forms part of that payment. So fortnight 3 starts on the 27th of April and goes, I think my dates were to the 28th. I'll just bring up my spreadsheet so I've got my right dates up here. Here we go. So the 27th of April to the 10th of May starts fortnight 3. So if you're intending to start by fortnight 3, your payment date starts in that period, you're fine, you've covered it, as long as you've paid up to the $3,000 per employee as a minimum.
But if you want the JobKeeper start to from fortnight 1, you need to change the payment date to perhaps the 30th of March instead of the 30th of April.
Well, that would have fallen in with the previous pay, so they would need to go and do the full file replacement and edit the STP lodgement so that it shows fortnight 1 and fortnight 2.
Yep.
Or fortnight 1 or when it started in fortnight 1.
Okay, questions from Brian. Can we get the printout of the webinar? The webinar is recorded, so you can, it will be posted up tonight on the website from the govreports.com.au/webinar. You'll be able to access the recording of this webinar, and if you really need the slides, just send us the email and we'll send you a copy of that, Brian. Any other questions before we finish off? Okay. Questions from Valeska. At our firm, we just use GovReports quarterly to lodge STP for clients who don't have compliant STP software. How does it work for these clients, please?
You are now going to have to report monthly because the ATO uses the STP information to prove that you have paid your payment to the employee, the minimum $3,000. So I'm in the same situation. Most of my clients, I used to do it quarterly because we were allowed to under 4 employees. I'm having to change my system that I now change it to we'll be reporting every month.
Okay. Seems like we covered the last of the questions. We'll wait for 1 more minute and unless someone else has other questions.
Yeah, look, guys, it's all scary. Everyone is, scrambling for information. It will work out, you've just got to methodically go through and follow the steps, follow the process. And once you do that, it will flow through.
Okay, it's so another question from Valeska. So it stays the same if they are not opting in for JobKeeper. So it's just following from the questions regarding GovReports software, you reporting the quarterly. The next questions from Valeska is that so that it stays the same if they are not opting in for JobKeeper.
Yep, if you are not applying, and there are a lot of organisations choosing not to, mainly because they can't afford to pay the wages up front, or they've got employees that are on, only working 1 day a week. So the business has made a choice not to do for JobKeeper, in which case nothing changes. You keep reporting exactly the way you're reporting now. Nothing changes.
Questions from Amanda. So for the employees who pay weekly, we will have to do the full file replacement on every pay run in April. I can answer that, Maria. Amanda, you won't have to. You only need to do the JobKeeper start to include when the business should be eligible for the JobKeeper. So if it is from fortnight 1, you should have do the full file replacement for the that particular pay run that included 30th of March. If some of these employees do have the top up amount, then you would need to do the full file replacement for each and every pay run weekly to include that top up amount in the allowance sections of those employees that are eligible for the JobKeeper. Okay, that's the last questions that we've got from today. So if you do have further questions, you can reach out to us of the webinar or of the sessions. And it is, as I mentioned, the webinar is recorded and will be posted on our website from the webinars page. If not, just we will be sending out copies of the recording possibly by tomorrow. Thanks everyone, and yeah, stay positive.
Thank you everyone.
All right.